Good morning. It's Wednesday, June 25th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So today I'll be returning to the Chicago office. If you do need to place an order specifically in the afternoon, if you normally call or text me, please reach out to the trade desk or the team. They're always available to assist you. Now, although we didn't witness a breakout in the silver market yesterday, the dip buyers were really active here, with ETFs adding about 7 million troy ounces of silver holdings in the previous trading session, representing the largest one-day increase since March 24th. So you want to shift to the broader markets here. Stocks, they are taking a bit of a breather here after that record close in the NASDAQ, and traders, they might not be feeling entirely optimistic due to the ongoing tariff and geopolitical uncertainties. However, the ceasefire between Israel and Iran appear to be holding, and the traders, well, they just feel that they can't be staying on the sidelines. So the FOMO trade really took hold, specifically in the NASDAQ market, and then the spillover effect when the other things, specifically like Bitcoin here. So you do have some geopolitical tensions easing and concerns that tariffs could resurface. So the geopolitical tensions easing, the talks of a ceasefire, the talks that we've concluded our strikes in the Middle East here, puts pressure on the gold market, rips out that geopolitical tension premium. Silver futures become a victim of that. That's where we sell off. And then with high copper prices, with the broadening of the stock market rally, Bitcoin, that's where the dip buyers come into the silver market. Now, regarding the tariffs, the EU does plan to impose retaliatory tariffs on the US if Trump does impose these baseline heavies on the Europeans' goods. So they are going to retaliate and rebalance here if some of the key sectors are hit with this asymmetrical deal here. So this would occur if the outcome negotiations result in a 10% tariff. So check it out on the S&P 500, 6147, just slightly higher. NASDAQ up 40 points. Russell 2000 down 4. Now, if you look at seasonally, July is favorable for shorting low-quality small caps because over the past 10 years, the Russell 2000 has underperformed the S&P 500 by about 2% from July 1st on out to September. Now, remember that past performance, not indicative of future results, because one could also argue, and this is where the S&P 500 kind of goes away from the Russell 2000, is that we see resilient macroeconomic data, positive earnings per share growth, less confrontational rhetoric is what I'm expecting out of President Trump in trade, because why would he come out with stocks at record highs, the Middle East conflict behind us, and start all of a sudden throwing the hammer down on tariffs and destroying the entire stock market rally? Now, I don't see any type of situation where we would go down and retest those lows here that we saw in April, but surely he would not want to jeopardize that. He would want to build on the momentum that he's currently seeing. So we're also seeing some dovish comments from the Federal Reserve, and we've got lower energy prices. We didn't get that six-figure trigger like what we were thinking, that if they shut down the Straits of Hormuz, which Iran can't do because they would just upset Japan, South Korea, and China. And also there are other key regional people like Saudi Arabia, even though they've got another pipeline that could ship 5 million barrels per day throughout into the Red Sea and elsewhere. So, you look at Fed Chairman Powell, he did reiterate that there was no room or no rush to lower interest rates. However, again, oil prices down significantly in 2 days. You could potentially see that interest rate cut expectation come up quite a bit. Now, yesterday in the S&P, I did give you some levels to watch here. It was a move over 6,100, could push up to 6,150. I think that we could be headed to 6,200 if we're able to break through 6,150 with any kind of upward momentum here to the upside. However, you might see some selling pressure at 6,150. We do have economic data coming out, new home sales at 9 a.m., and then Fed Chairman Powell, he is going to testify before the Senate committee. Shifting to the metals markets, so copper futures up for the fourth consecutive day, despite those signs that the shortage at the LME may be easing a bit. So you get the spot contracts, they surged over the record premium of the 3-month futures. That's where a short squeeze occurs. You look at where spot is, and you look at where the futures is, and if there's a inverse correlation, they are significantly higher on spot, then you're going to see a short squeeze in place. If you go out and the farther out they go, the higher it costs, well, then that is the fact that you are storing this and then you just don't have that demand premium in there. So we did see the difference in the premium here, spot over futures, basically cut in half here yesterday. with the inventories. They have dropped about 80% this year, and it's because of the fact that there's been record shipments to the U.S. ahead of any kind of upcoming tariffs here, and that's why copper futures are up about 13% since about early April. Now, a couple of headlines that I'm trying to get my head around, and I'll probably be on the plane reading some of these things here, is where is the opportunity? Is it in copper? Is it in natural gas? Is it in other markets here? Because I've read some headlines recently where New York's grid operator briefly issued this rare warning suggesting that this heat wave is really straining electricity prices here, bringing them to record highs in Long Island and New York City. Then you go completely to a different area of the world here and you look at Japan. Well, their nationwide next day power prices jumped 25% to a 15-week high. The rising demand and cooling is really stretching that grid and already putting things under pressure here. So with AI, with power demand, that's where I think that copper is really your baseline metal here, where we're going to continue to see this thing is the tortoise and it slowly moves higher over time. The where you get these big copper sell-offs is any kind of weakness over in China, because they are the largest consumer of the copper market here. So on natural gas, that's the other market that I was looking at. They settled at the lowest level in almost 2 weeks, and they're citing that there is cooler temperatures coming in the next few weeks here, dampening that demand for air conditioning and storage levels. They are about 6.1% above the 5-year levels, which are weighing in on prices. But what I'm looking at here is that natural gas prices are coming down to the 50, the 200, the 100-day moving average, and are all converging right around this level. So it could be a key level of support for a small upward bounce in prices. Not a specific trade recommendation, not investment advice, just what I'm thinking in my head. Now you look at gold, the dip buyers, they emerge on that because, prices, they did consider that temporary truce between the Middle East and some disappointing U.S. economic data coming out. That raises the hopes here for potential interest rate cuts by the Federal Reserve. So you get one part of it taken out as far as the Middle East, the tensions there, but then you focus the U.S. economic data, potential for interest rate cuts. We've got to analyze Fed Chairman Jerome Powell, because we're going to be shifting back to the U.S. economy and trade risks here. You've got this delicate ceasefire that's going on between Israel and Iran. You also have them coming out saying that they sealed off the bunkers, or where they make this nuclear their nuclear facilities over in Iran. They didn't actually destroy them. And then there's also 900 pounds of enriched uranium kind of floating around somewhere. So they're going to have to find that as well. So gold does remain supported by the underlying risks here that there remain significant of. There is a possibility for renewed geopolitical tensions, especially if things start back up here in Iran here. And then you got the U.S. economic data, it really declining here in June, potential for tariffs, economy, and also the jobs market. So I'll be looking at the Fed Watch tool here going forward here, and then also the ETF flows, because they do continue to trickle into the gold market, and about 260,000 troy ounces. And it was the 9th straight day of growth here, the longest winning streak since April 21st. Again, we touch base on silver, up about 7 million troy ounces here, biggest one-day increase since March 24th. So you look at year-to-date percentage change, gold up 8.9%, silver up 7.7%, platinum, they continued to take some profits in the platinum market, and platinum's finding a balance right around the 1300 level. And finally, the gold silver ratio at about 93-1. So if you guys got any questions, reach out. You want to open up a trade account here, you want to get some exposure, because you look at some things that I've laid out for you. Equity futures, they could continue to rise. NASDAQ and S&P 500, they do have micro futures on that. They have micros on the Russell. If you're looking at taking any kind of bearish bets on that, adding oil near these support levels. If you get the chart pack, you'll see if you connect all the tops on the crude oil futures, it actually ran right up into there. Despite all the headlines and everything, technically the resistance held. Now we've come back to that level that was old resistance. Well, it was old support, new resistance. Now old resistance, new support, and we've come back down to support. So you got crude oil futures jumping up. We've talked about Bitcoin futures here, incorporating that as a leveraged NASDAQ play in many portfolios, where that is one that tends to front run some other twists and turns in the economy. So we want to keep an eye on that, and then potentially adding gold and also oil as a bit of a an isolator to other risks here with the broader US equity markets. And we talk about the benefits of adding some gold, some silver to a 60-40 portfolio for some diversification purposes. So again, you want to open up a futures trading account here, give us a call or shoot an email at info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss and it may not be suitable to all investors. Good luck, good trading.